Good morning, ladies and gentlemen. A very warm welcome to you on Business Today Television. Markets have started the month of May on the front foot. The often repeated saying is sell in May and go away, but it doesn't seem to be impacting bulls on Dalal Street. We've had a 5-month high on the Nifty. Early morning it was above 24,500, still 107 points higher, up 0.5% at 24,441. Across the board, there is buoyancy. We track 19 indices for you. All 19 of them are in the red. The advance decline ratio favors bulls in the ratio of 2:1, which means that 1668 stocks on the National Stock Exchange are in the green compared with 800 that are in the red. There is enough and more momentum on the long side. Defense is doing very good. Record high on Moscow Dock, Garden Reach, Cochin Shipyard. All of them are in top shape. Banks are doing pretty well. HDFC Bank 0.5% higher. Infosys, Reliance, SBI and M&M are providing strength to Nifty on the long side. And of course, there is Reliance, which is again the center point of existence as far as markets are concerned. A very, very strong show on Reliance post earnings is the reason why you have the Nifty in a strong uptick. ICICI Bank, fresh record high, contributing 28 points to Nifty's total, Maruti contributing 13 points, Adani Ports contributing 12, Reliance and SBI respectively 12 and 11 points in the green. Now, what's pulling the Nifty down? Nothing to be worried about. Bharti Airtel recouping a bit from its all-time high, JSW Steel, Kotak Bank, Eicher Motors and Bajaj Auto slipping a bit. Without further ado, what we'll do is we'll speak to market expert Shri Arun Kejriwal. For the last 35-38 years, he's been watching Dalal Street with a keen eye. He will share with us his perspective for the month of May. Namaste Arunji, a very warm welcome. In the past 22 years, for the first time, our domestic institutions own more of corporate India compared with foreign institutional investors. That's a very welcome step. What are your views on sentiment on Dalal Street?
So it's a very important day as far as markets are concerned. First trading day of May. You have given a lot of data inputs. We also need to understand the geopolitical situation on the economic front. GST numbers record high. We've crossed the 2 trillion mark. The tariff, Trump tariff trade war, as it is known as now, it appears that India could be the first country off the block. We seem to be getting somewhere there. And one should not be surprised that if in the next 10 to 15 days, we actually have a trade pact with the US, with majority of the items taken care of, couple of items remaining for debate. We also have the tension on the border, which I believe could be something which is a big dampener for this market. But it's for us to look at markets and not look at things politically. But that would be a big overhang on any big upside that happens. Coming to what we are seeing in the markets, Reliance, for the umpteenth time, post results has provided the fuel, the fodder for the markets to go up. This is the fourth trading session since the results, and the strong performance that Reliance has shown has actually given the market the momentum to cross multiple resistances and now stand a little below the last resistance that the market had, 24,500 on Nifty. We have slipped over the last half an hour or so, but market is in good fettle. And I believe May should also be an interesting point. An interesting month. You raised an interesting point, Shell, where you said sell in May. I don't want to rule out that adage of many, many years. Today is only the first trading session. This could be a developing month. As you remember, April was a topsy-turvy month and a roller coaster ride we saw in the month of April. How May unfolds, only time can tell.
Right. Arunji, just a point on Reliance. I'll request the PCR to draw the long-term chart of Reliance from a low of 1125 on April 4th. In a span of just 1 month, that's roughly less than 20 trading sessions, the stock has appreciated 27%. 300 rupees, more than 300 rupees in the past 20 odd trading sessions is what Reliance has gained. Arunji, let me just play the devil's advocate a little early in the show. I just wanted to understand that is there a set of very strong, deep-pocketed individuals who are boosting the market higher and higher ahead of an eventual military strike in which the market will fall, as it has in the past conflicts, so that the net fall in the market is much less than what it ideally should be. This is just a theory.
So let's change your theory and put the institutional part of the business into it. Foreigners sold from September to February. Month of March, they began negative and finally ended marginally positive. April, they were big sellers in the initial part, and in the second half of the month, to be precise, 11th or 12th April onwards, they turned buyers. Aggressive buyers ended the month on a positive note. Now you have a situation where India seems to be getting its fair share of uh, eyeballs. Money is coming in. The rupee has appreciated while corporate India's performance has not been up to the mark as was expected, but it hasn't been a period of disappointment where we had a bad quarter so far. Things seem to be looking up. With the tariff thing also playing, you could see positivity coming in where India becomes a preferred manufacturer for many things. Above all, something which is close to many people in the elite and upper elite and the nouveau rich, the apples that they use as a hand phone. India could probably be the largest Apple manufacturer uh, in the year 25-26, at least the second half of FY 25-26. Now, taking all this in perspective, somebody has bought, domestic institutions are flush with money that is coming in from investors. Yes, there was a dip in SIPs over the last few weeks, but that is not something which can turn the turtle, which has turned turtle overall. Things have slipped a little bit, but it's not alarm bells as yet. The big change has been foreigners making, if I could say, a 360-degree, a U-turn, where from negative they have become positive. They believe with a stable economy, interest rates coming down, results seeming to have an uptake, favorable trade policy likely to get negotiated, India could be in that sweet spot where money could also be made in the stock market. So it's not that you have some people who have got together, push the market up for an eventuality. It may happen, it may play out, but it is not a group who have pushed it up. It is institutions who are playing the market, who have actually put in money. And like you mentioned, domestic owns more of India now than foreigners.
Yes. Hmm. Fair point. So let's take this discussion forward. Now that the base has been set for the market, and Q4 is not turning out to be disappointing. In fact, thanks to these earnings, we have had record highs on HDFC Bank, ICICI Bank, Bajaj Finance, to name a few. These I have named because these are index heavyweights. In your experience, Arunji, when a stock breaks past a 5-year congestion zone for whatever reason, whether it's a merger or a sectoral downplay, what 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 triggers future moves, and how do you see them? Given that in the banking space we now have enough liquidity, rate cuts are coming, probably the credit cycle will improve, treasury profits will rise. How do you see these two banks, HDFC Bank and ICICI Bank, at record highs?
So, three things that I would like to highlight, Shail. Number one, the weightage of the BFSI space in the Nifty is close to 40 to 43%. It means they as a group constitute a very big portion of Nifty. And it would be fair to say that if BFSI is not positive, Nifty will not be positive at that point of time, whether you're talking of 1 day, 1 month, 1 year, or whatever have you. It means BFSI has to be firing on all cylinders if you want a good performance in the stock market. Point two, whatever tariff war that we are talking of does not affect the banking sector. There are no tariffs that are going to be imposed on this sector. And the banks which are involved, or the companies which are involved in this, will have a uh, unchanged, uncharted area to move on. With India by and large doing well in the domestic sector, I'm talking about companies which are not part of the import export to US bracket. It's life as usual. And that, according to me, is 85-90% of corporate India, who are not affected by imports, which are needed to have a hunting pack for the bulls if the market is to go up. So you have that scenario. You have Reliance having come back into the fray, and to chip in HDFC Bank, ICICI Bank, Axis Bank, Kotak Bank, they are all virtually at lifetime highs or marginally around there.
Okay, fair point. Arunji, what's also seen in practice is that one invests in stocks but worries more about markets, whereas it should be that you invest in quality stocks at low prices and keep on holding them till they reach their intrinsic worth. At this point of time, where are you pouring in your fresh money? What looks good to you?
So at the point of repetition, it's, वो बोलते हैं कि हिंदी में कि हर कुत्ते का दिन आता है, तो मेरा भी आया है. I was very bullish over the last year or so on PNB housing. नहीं, कहावत जो है उसे चेंज नहीं करनी चाहिए. So anyway, PNB housing is one stock where I believe now the market will also sort of chip in and agree with my feeling, with my guts on this company. The investor who had put in money many years ago, Carlyle, is now out of the company with his last sale of 10.44% today morning. This has happened at a premium to the floor price, and it's a very big thing that you sell 10% of a company at a premium to the floor price that you have set. Second, if we see the results which were declared about 4 or 5 days ago, they are an excellent set of results. The company is seeing traction. Affordable housing, which is an important segment for this company, is firing, is doing very well. company has reported robust numbers, AUM, and now you have a company which is not expensive in any parameter, is doing very well. The sector was ignited last year with Bajaj Housing Finance taking the cream and attraction of the company. But barring the first 3 days of listing, when the share moved from 70, which was the IPO price, to a high of 188, it now seems to be moving between 115 and 130. I believe the time for
Yes.
PNB Housing, with this overhang of that institutional investor who kept on selling periodically, now being over, the fact that this share is majority owned by institutional investors, mutual funds, FIIs, etc., one will see this share doing very well. Along with this share, the other companies in the housing finance space will also all do very well, because this is another sector which has got nothing to do with tariffs. It's a housing
Fair point.
finance given by banks, given by these institutions to locals, to domestic, let's say domestic people, and it's something that you need to have your roof over your house, come what may.
Okay. So PNB Housing emerges a clear winner in Arunji's quiver full of quality stocks. At this point of time, Arunji, it's clear that domestics will remain on the top of all uh, sensible equity strategists who would like to put in fresh money. Anything in the PSU sector catches your fancy? We are now seeing record highs on at least Mazgaon dock, and all defense counters have come up very, very sharply from their most recent lows. I would imagine 30-40% uptick has happened. Is this a space worth hunting?
So, at the point of being negative, Shell, I believe a lot of this movement is got to do with the current geopolitical situation with our neighbor, that there could be something happening, and hence uh, there would be uh, a great impetus to the defense sector. Let's understand that defense sector, you need years to make a warship. You Muscat dock is not given an order tomorrow morning, and they churn out a ship a week later. Things don't happen like this. Any sort of defense company is a long gestation period. So anybody who's investing for momentum, considering the current geopolitical situation, could be in for nasty surprises over the short to medium term. Fine momentum has moved the stocks, but don't expect this momentum to continue infinite. Things will take their own time, and the sharp rallies that you have seen could see even sharper correction. Not trying to say that you've taken a wrong decision, but
Fair
just
point.
cautioning investors that this is not how defense stocks move. If you talk about
Fair point.
uh,
And a word of caution. A word of caution at the time of euphoria is the best bitter medicine that one can offer to newer set of investors who keep on trickling into the market. Arunji, you were saying something.
uh, you were asking what are the other things that catch my attention. Pharma is a space which is
Yes.
looking attractive. Corrections have happened, valuations have got corrected, tariffs have got a role to play. But I believe as you see commentary coming and going, everybody throwing in his two bits, certain things are becoming very clear. America cannot afford to put a sharp tariff on generics. It's very, very clear. India is only in the generic space. We are not exporting drugs which are made by innovators, and we are not in that space. So to expect that there will be that 27, 28, 30% tariff on Indian pharma exports to the US, it's it's just not possible, because the biggest impact of this would be on the US government, as they pay the majority of medicinal expenses, healthcare expenses in the US. So that sector is looking good. Valuations have corrected. Business for these companies will continue to grow. And we are also seeing that Indian companies are investing a lot of money in R&D, which is giving them plenty of opportunity to actually do some sort of re-engineering of drugs. One other thing, as time passes, number of drugs that come off the patent list are increasing, and we are seeing that when something goes off patent, the number of people who get in to make that drug and capture that market, which has hitherto been a monopoly, increases widely. That's another sector which is looking very interesting. While on the tariff, one area which is of real concern is the auto sector, because America is very keen that import of second-hand cars be allowed into India at concessional rate of tariff. Concessional is a very wide term shell, but much lower than what India imports new cars today. If that happens, that could hit our auto industry very well. And I believe this is one area where the industry, the government are all trying to put their heads together to work out a strategy which will not disrupt the Indian auto market, because India is a fairly large four-wheeler passenger vehicle manufacturing country.
Okay, fair point. Let's look at one other sector, Arunji, which was born while we started working in Dalal Street in the 1990s, which is software and IT. We've had a fairly sharp bounce on the IT index in the last 15-20 sessions, as it bounced after a 40% fall. What is your view on the IT space? As a long-term watcher of the markets, do you think IT is now slowly walking into the sunset given the emergence of AI?
Well, it's a very, very strong statement that you have made, Shell. I'm not quite sure, but some of the interesting clips that I see uh, on YouTube, etc., make me scary. That in some time, probably there would be somebody who is talking like me to your viewers instead of me actually talking. Now, all these things are scary, but let's understand that an IT company is also equipped to do this AI work itself, and to provide sustenance, stability, and control. It is the software companies who will have to devise systems for corporations. It's fine if I want to do some AI work, that I put together some tools, etc., and manage my work, but it cannot be done in a scalable manner without systems being put in place. So IT is going to survive. What is currently hurting IT is the fact that the kind of guidance being given by companies is low single digit growth guidance in terms of growth and also margins. that is hurting these companies. If a company talks of 2, 3, 4% growth, why should I give it a PE multiple of say between 25 and 30? I can get this kind of growth with so many companies, and they would be available at sub 12, 13, 14 PEs. So what is so great about an IT company that it commands such a high PE? The second thing is that you're not investing in these companies for dividends and buybacks alone. These companies have been very liberal with their dividends,
Yes.
bonuses, and buybacks. But that cannot be the only reason for commanding such high valuation. So somewhere down the line, you will see the market correcting with IT valuations as the growth numbers that these companies announce and deliver take a beating. So IT cannot be written off currently. It will continue to function. Business may get tougher. Margins could get impacted. Churns in IT companies, attrition rates could rise. So if we put it in simple market jargon, troubled times for IT, but not yet time to write off the sector.
Okay. With that, Arunji, we'll call it a day. Thank you so much for joining us and for sharing that wonderful view on the housing space plus pharma. We'll be in touch. Thank you so much. Have a nice day and the week ahead.
Thank you.
That, ladies and gentlemen, was Mr. Arun Kejriwal, market expert at stocks, and his loan recommendation for today has been PNB Housing. Please do consult another independent financial advisor in case you are wanting to take a long position in PNB Housing. Remain glued to Business Today Television. There's a lot that's happening on the channel. I'll be back at about 2 p.m. Have a nice day.